All right. Hi there, guys. Now, just someone give me a nod if you can hear me, if I'm coming through loud and clear. First things first, make sure you can hear me and that we're not going to drop out today. Bit to talk about. Nice action in the market. Right, let me just get up the chart. Something I'm going to do. Let's notice it. There we go. All right. All right, then, guys. Minimize that. All right, ready to go. John, how are you, mate? I've got your email, so we'll have a chat about that. Was someone else asking me about AIA, or was it? No, it was you. All right, welcome, guys. Welcome to TradeSetup, the live stream for the 7th of June. So for anyone new, I know everyone else has probably heard this 100 times by now. Welcome, and you'll see our general advice warning on the screen there. So just take a second to read through that. You may have to pause later on and review it there, but we don't give personal, don't give personal advice. It's just general advice only. It's only our views and opinions of what we see through tried and true experience. On the top left-hand corner, you'll see us. That's our, I think you call it Twitter handle. I'm learning all these new words, this new terminology, but that's in the top left. You can join us there at trade_setup. You can join us on Facebook, but not much difference between the two up there. Twitter, we're a bit more active on that. And the bottom right, just subscribe to us on YouTube. That's at, at TradeSetup, capital AU. You'll see there. All right, let's get cracking. I'll minimize that. How's everyone doing today? You're enjoying the day? So far, so good. There we go. So first things first, it was a big night last night in the US. It looks like any sort of concerns over trade tariffs or trade wars were brushed aside a bit. And I'm probably just going to drop in and out, so sorry about that. Don't know why I'm having a bit more difficulties with the internet. I think if I use it too much, they cap me. I don't like it. Yeah, so good move up, about 350 or so on the Dow up last night. So it was a big mover on your top 30, which is good. The S&P 500 is wasn't up quite as much in percentage terms, but they both look really nice on the chart. We'll go through those in a minute, and that's what we were talking about on Monday. If we can get a break up through there, I think we're going to have a little run higher. So I think that the Dow and the S&P or the US and Nasdaq's into new highs as well are going to kick on a bit. So that could give us a bit. And if you see us intraday on the ASX, we're looking pretty good. So we'll go over those charts. Yeah, it's all positive in the US. Not too worried. They're not too worried, like I said, about trade concerns. I think the more the news pops out about it, the less it becomes, it gets factored into the markets. And the more it jumps around, the more Trump says it's up and down like a yo-yo. People tend to it gets muted. The response gets muted by the market. If he does come out and say something new, it has to become more and more impact from the news announcement, I guess. I don't know if anyone went through when all the, after September 11th and once all those sorts of things were happening, there was more terrorist attack. The market become a bit more, how do you say, weathered to it, the news, to the point where something would happen and the market wouldn't react because a lot of the time, if it reacts lower, it'll bounce back, or if it takes off, it'll pull back, all those sorts of things. When it reacts to news quite hard, it eventually comes back to the same, to where it started. And that's what was happening in the past, and it seems to be that's what the market's more focused now on fundamentals, and they've had some good data out. In the euro too, they were talking, or was it the ECB, or talking about potentially unwinding their tapering or their, what is it called again? For that word, anyway, uh, their bond buying program and potentially looking at raising rates. They're looking at inflation figures at the top end of hit the top end of their target, which is going to be positive. And the euro took it quite positive, although it's not. They haven't said it's going to happen, but they said there's a good likelihood that that will. So the euro bounced a bit. You probably see some more appreciation in the euro over time. That's going to put pressure on the downside on the US dollar. Bonds dropped off, so bond yields have risen, which is going to be interesting also. So we'll see how that plays out for the next few weeks, next few months. So let's get into the charts. Just take a look. We'll start off with the ASX. Actually, I'll look at the down. I'm going to break down the ASX a bit more in a second on another program. Undo that. So we'll start with the S&P. You can see that's the move we're talking about. It's had a good run up, a good correction. That was at the start of the year when the market was getting a bit ahead of itself. Everyone was really expecting a correction, and if you weren't there, you might just want to have to check your fundamentals or your technicals. So the market was getting well and truly ahead of itself, especially through January. You can look at the start of January from 2,700 pushing up to kept every day, pretty much every day making new highs right up until about 28.75. So that's a massive move. Got smashed down there, good reaction back up, and then you see this choppiness starting to play out. What we're seeing now is the volatility in the moves are getting a bit less and it's getting a bit more contained. So you can see this major double bottom through 25.75, another minor inside higher low at around that 26.25 zone through here. And that's led to the market starting to move up. So you can see that curve in the overall price action. And this is quite positive. We've flushed out quite a lot of people from the late, even you look way back here, probably till about October. Anyone who was buying it in there spent quite a few months and they were flushed out pretty much over the period of a few days, a week, in that big move down. And that's when they started buying back in about October or so. So there's a lot of people being flushed out of the market in this move and they've got chopped around in here. And the market will do that time and time again. And it starts to lean towards a direction again, whether it's down or up, whether there's more to come in. But we've been proven buyers were stepping in here. Okay, that's your first move down. They stepped in here, bounced. They come all the way back down. They were stepping in again, started stepping in at higher levels, stepping in here. We spoke about this on Monday, or not Monday, last week, when the market rolled over, took out 27. It's basically because, well, technically anyway, when the market has had a bit of a pop here, had a bit of a pullback, tried to go again. If it was strong there and it can't get through, and the market's looking to rally, it can't get through, they'll have a bit of a pullback. Just clean out a few of these late people into that trend, just below 27, which it did on this day here. It was back in the 29th, which I think was Friday. I think it was a Friday. Cleaned out those traders there and then proceeded to rally straight up and through. That was the highs at 27.42, 27.43. So it's looking good. It's looking good for me for a move up to 28, even potentially wash that level out, or it could just continue. If we get slightly different price action, if the market's, I should just take a snapshot. What I'm looking at, if the market's a bit more contained, you can see this move up here. It's gone from, only about 40%, but it's getting into that sort of overbought territory. Now, if we get something like this and the market just chops around, holds near overbought, the market can just go straight up. It'll probably touch up in the resistance. It might even just flush it out, and then you might get this correction lower and then go again, see if we can just pop up. Otherwise, this move might just be a bit more contained. And if it's more contained like this, I'd expect it to just go straight through 28, just cut straight through and hold, maybe retest it and then go again. And then potentially it could be, over the longer term, looking back up to new highs of 28.75 and above, or even retesting right up and towards that high. Now, it'll be interesting to see what happens when we get up there, or if we do. I'm sort of banking on this happening a bit more controlled, a bit of heat coming out of that market. There's still going to be a bit of skepticism out there. And don't forget, if talk of trade war, it might just be a bit of profit taking. People are continually taking off risk in the market and putting it back on, taking it off, putting it back on, especially in the US, because of going into these highs. And if you look at a weekly chart on the S&P, it's a little bit more dramatic. That has spent a good part of about 5 months just cleaning out these traders, cleaning out these last trades, and that's great. I mean, it's nice. From here, it looks more inclined to have a bit of a pullback, maybe retesting down to that 26.75 just from here, or like I said before, this type of price action would be nice, and we could pierce straight up. So we'll have to take it as we come. I mean, even if it does get up to 28.75, there's a lot of fat in that. Another 100 points on the S&P, which is quite a big move. It's probably 1,000 or so on the Dow maybe. So we'll see how that plays out. Dow here, same sort of action. It's just pierced up through, and that's not as overbought. Look at the weekly. So this to me is suggesting the way the stochastics have kicked up off this higher low. I'll just draw it up too. That for me is a lot more bullish. So this one here, we had that sort of breakdown. You got some key support through here. You know, even after this, you call this a washout more than anything else after the breakout. And it's very important to take note, you know, any sort of technical, whether it's a share, the index, currencies, we get this sort of contraction lower off this nice base that's been built. So this has taken a fair bit of effort to build this base and then pop out and push up and out of contraction when you get that, even if it's just by a few points. It's always important. I'm always looking for a high low after that. And a lot of currencies, currencies and indexes too, and futures, especially if you trade those, you'll get a washout, something like that, or you just get that two moves like we said we talk about. You've got one, two, those two moves down before it takes off, and it hasn't really got back down to that major base at 23,250. So all this picture is very important just to take note of when you're watching indices, or anything really, just so you're on the right side of the price action. And the right side of the price action is what we always want to be on, is when it's come from contraction, is what this action is, into expansion. And we're going into expansion now. You can see we've got a high low here. We've broken through this high as of last night. Not by much, but that could easily lead to, you know, just this type of price action, stair step its way up to all the way back to new highs. Well, potentially retest the highs at 26.5, but we'll see how that goes. We'll just take it as we come. Again, we can have a good night on the Dow, and you can see how it's plowed up 350 points straight up into that just to break that last night. So hopefully, I'm expecting these higher lows to hold. I think that's going to be quite good, and that's just going to keep. It could be well and truly contained. I mean, this move up you can see sort of the angle of descent as opposed to ascent as opposed to descent. What we saw here, this bang straight back down. This is a bit more contained. So if we get this type of movement on a nice controlled angle, that's going to be quite good. And that could easily just take us up and through highs and just continue on. But we'll see. The FTSE, not much action. You know, not much has changed. The DAX, similar. Although, I mean, although that's happening with the euro when they're looking potentially at inflation is at the top end, economically that's really nice. You still got the problems, you know, with Italy, especially if all that plays out, what's going to happen is bond yields are going to go up, and that's going to hurt the cost of debt for Italy. So they've got massive debt. That's going to hurt that. Plus, if they need more debt to get out of the issue, get out of their problems, that's going to cost more. As the euro or bonds start factoring in potentially a rate rise, and so yields are going to rise, and that's just going to put pressure. So they sort of got this balancing act between you got Spanish problems and Italian potentially, offset by actually quite a strong economy. So it'd be interesting to see how they attack it. And that's probably why that's not as bullish as what the Dow, even we are. Let's just look at Asia quickly. Not much on that. And the Nikkei, had a good push up. We had that, like everything else, just got sold off. A couple of lower highs pressed in, and it's just banged straight up. That's nice and controlled. Good, decent correction there. Little pullback to 22, and we'll just see if that can continue to push up through 23 and starts attacking the highs at 24. You would expect stuff the Dow's looking positive, and the rest of the globe is looking positive. Hang Seng, it's a bit more contained. You can see it's quite clear between support just below 30,000 and resistance up towards 32, 31.8, or thereabouts. So they need to break up through this high. Whoop, that's not what I wanted. Break up through this high. Oh, what's that high there? Somewhere around 31.5, 31,600. If they can get up through there, it's not so much a high low, so it's not showing too much strength. You need to plow up through it, pull back, build a high low, and then go. And I think that'll take out all this resistance through 32, and then start attacking up towards 33. That's if everything sort of falls into place. Now let's go over to just quickly looking at a chart. This is the ASX. 30-minute, we won't worry about too much. We're just going to go start off at the weekly. it's still holding quite nicely. That weekly trend's holding quite nicely. Get rid of that. The anchor is way down here. I mean, it's miles away. It's 46.91, and that's. But what the main sort of interest for us is, say this move up. Well, if we can make that a bit thicker, how do I do that? I'm still a bit of a beginner on that, and I'll make that a different color. If we can see that, and that's where our support is. That's where I'm sort of keen on that move continuing. I mean, you're going to get these up and down sort of price action. And we just clone that actually. I'll draw that so you can see what I'm talking about. So that's that's a big push down, a reaction back up, and you can see that was over the GFC. Yep, GFC move got smashed, reacted up, and it's come back down and had to reset. So the new leg pretty much originated from way down at 38.55 or 38.50, say, and that was that new leg up. Before we had a decent correction just to take out the anchors for that weekly trend. We've corrected. That's your macro correction there, and then we started heading higher again. So if this all plays out nicely, and it just lines up too nice for me to think it's not going to head up towards the highs. I mean, it's taken us a long time to get there. The rest of the world's into new highs. Potentially the Dow has corrected off, making all-time highs, and we're just struggling to get anywhere near them from pre-GFC. But yeah, it's looking good. You're going to get the swings and roundabouts on the daily charts, even intraday. So that's going to be a bit, obviously, going to get a bit choppy, which you expect. But still, as long as this trend holds, it's going to pop out. You might have to retrace, pop out, retrace, and as long as it keeps doing that, you get some sort of correction like this. This one corrected sideways. This is a good correction back. Still holding anchors, and you can see if we just draw that there, that's your current anchor there. Before that, it was somewhere around here. Before that, you'd start to say, whoop, oh, that was an anchor there. Minus, there's a major anchor back down at, say, was that 50.50? So yeah, this is your current sort of anchor to the major trend up. We had a good correction there, popping up. So this leads me to believe after you've corrected, you started to build that anchor. It was a good move up, and we've just had to take some heat out of that move. I would expect more choppier price action, not just to take it out in one foul swoop, those highs at 61.50, but more. I'll draw it on my other chart. More something like this, I would expect. Or maybe get up here, a bit of contraction just to build and just get that sort of little squeeze and then pop. That's what I'm expecting more. That's going to take us and lift us up through 61.50. But then again, I mean, if the US just keeps on going and they head up, it's probably enough oomph to potentially just break up straight up and through. But again, we have to take it as we go. It could just pop straight up the next couple of days, and then we've got to assess it. Is it going to be a bit of a washout before we back and fill back into that zone? But either way, if you're a longer term trader, it's all looking quite rosy for me. It's more if you're a daily trader, not a daily trader, but if you're looking at your daily charts, there could be where it pops up and it pulls back. You take a bit of heat on positions that are broken out on your individual shares, and then you have to assess it as we go. So that's me. That's what I want to talk about on that. Um, Either way, I think things for me are looking quite positive on the markets. What do we got now? We got out of one. It was a BOT the other day. We got stopped out on that. I don't even know what that's doing, to be honest. Now, stop looking at it. It's probably not such a bad thing. So we're at 15.5. I think we got done it. They're still hovering around that same zone, but you can see that a lot of heat come out of there. I think some announcement come out. So this is the one. Yeah, this is the one I put up on a forum, saying you can't tell me that there was some good news come out, and it's actually gapped down. It's opened down and just sold off into the news. I mean, quite positive news yesterday, and you can't tell me that someone doesn't know pre the news release. So it's quite interesting. Some people are getting their heads up and some aren't. Or maybe that's just me being a bit bitter, but that's the way it looks like. So always be a bit skeptical. So when things start to go and they start to go hard, just be skeptical that maybe some news could be coming out that obviously there's people going to know. And whether it's just getting a bit of a ramp up into the news is good, and it gets sold off, and that's going to catch a lot of people off guard. We still got Whitehaven kicking along nicely. Pretty sure we got our risk 485, so just below this higher low here. And just going to keep an eye on to see where this could be potentially going. There's no mean, if you go back to the weekly, there's nothing really in play that you can see on that chart. You have to step back to the monthly to see any levels, and there's probably maybe up towards $6. It could be a bit of a resistance zone, but that's purely a technical play. From there, then you'd be looking up towards 7. So that would be nice if they can kick on the 7. We'll have to reassess just to see if maybe it's getting ahead of itself. We're due for a major correction or something, and I'd rather be out reassessing it. But then again, I'm always more inclined to tighten the risk up and get stopped out that way, and let the market pull back, stop me out with tight risk, than give it too much room and get stopped out that way, especially when you come into a clear zone. So the higher it gets, the more extended a market gets to me. Well, my personal technique would be to tighten risk up, because if it's a very strong market, they really shouldn't look back, and they'll just take off and blast straight through some resistance zones. But when they're particularly stretched into a clear cut zone for resistance, I wouldn't be the only one thinking about taking profits if I've been in for quite a while. And that's sort of the basis behind trying to tighten up your risk, not completely closing out. Did work out well for us on, was it BPT, which is just about, we got out at 172.5 or 173, and that did roll over. It looks like it's coming back up, but we'll just have to reassess that. I mean, I wouldn't buy it just here for a new entry. So I wouldn't be like, this could just keep kicking up, but oil is gradually, US inventories, they were more positive than expected. There's still talk of potentially OPEC cutting production. Increasing production. That's not going to do too much. Increase in production. So that's probably a bit of pressure on crude oil. So I'll be interested to see if these, like Beach or the other big guys, Woodside and that, just continue to step higher. What else we got? BKL. Well, it's just backed off. 149.5 partial, so we took it just below 150 from 133. Stops back at 133, and that's just really the idea behind that, taking that stop at 133 or moving it to 133, which is pretty much break even on the second or the remaining position, is that it's gone so hard. If it's quite a strong market, you wouldn't expect it to pull all the way back, and if it does, it's going to be breaking some sort of support zones. So I'd be happy. I mean, that's given it some, technically, I would normally leave it below. It should not have really moved. We've taken a partial on that. You take a partial because it's extended up into that zone we were looking at for quite a while, between 150 and 60. Excuse me. So happy to take that partial, but you want to give it some room to move if this thing is going to continue on and look positive. But I think it could. We'll just have to see. I'm still looking for that daily to press up to this zone up to 170, but it has to start putting in the effort soon to build that higher low. Otherwise, this could just turn around and head straight down again. But we'll see how that goes. ATS, that's kicking back up again. We're from 41 on that one, 43.5. So that's looking okay. I mean, high lows, high highs, nothing wrong with that little trend there. It's potentially getting a bit far away from the MAs on that weekly chart, but the daily. So we're going to get that sort of reversion to the mean. We want to see that extend. We want to see that extend up so we can take a partial and then just see what happens from there. The other one we got, new one, was ORA 49, where it is now. Got us in. I'm still liking that price action. Look at the weekly charts. Had a nice little correction there, but that was more sideways. So if we are caught in the correction at the moment, if history repeats itself, we go sideways, that'll be okay. But at the moment, it's actually looking like, extrapolate this out from, was it 2 to above $3? Take that from 270, add say $1.20, $1.10. What's that? 380, 390. So there's still a bit of room to move if we're going to have this equal and opposite, not equal and opposite, but equal leg up for this current leg up at the moment from the daily chart. But we'll see if we can just extend up, then okay, we can book some profits up there. And CAJ 31.5, it's just looking like it's ready to kick on now. But that weekly chart, if you're a technical analyst, that's a fantastic looking little chart. You had a big sell off here, a lot of heat coming out of the market. It's had a good little pop up, so it's always looking nice. Pop up here, and then for whatever reason, whatever it sold off, I don't know, it's probably more fundamental. The market had to rebuild itself and reset itself, and it started to lift here when we got up and through 30 cents. Then of course it started to hold another major high low. So all this action here, and this action here, it took quite a while. What was that? From about mid 2017, so close to a year. It's been going sideways and starting to come up only now. out of that sort of consolidation or that well, essentially building a higher low. So that's looking really nice. I like that in the weekly. So if that's the case, this thing could get a run on fairly quickly and extend fairly quickly. So we'll be keeping an eye on this one just for a potential partial profit on that. But we'll see. Let me get rid of something here. So that's it for us. I'm going to go over, so there's two things. Start chucking in some, if there's something you want to look at, guys, just start chucking into the chat, whatever code you want to take a look at, whether it be just stocks or currencies, whatever. I'll give my unbiased opinion on it. It's not usually unbiased. What we're going to do, what we're going to do. So I just want to check. There's one we've been looking at, which hopefully I don't kick myself about yet, is AIA. We've been looking at this one for a while, and it's quite clear. When you look at the weekly, I mean, that weekly, look at that, even going back, that's been a good, healthy run up. And what we're doing now, spent the good part of a couple of years, what was that, close to year and a half to 2 years, just consolidating on Auckland airports. And we've even had, I'll go and start from scratch. I know, I think if Laurent, if you're in, I think you're in this one, aren't you? It was doing so far so good. I just want to talk about my reason for hesitation. So we've had that little correction there. The market's tried to go up. It's like we said before, if it can't go up convincingly and you get sort of a double top, the market's got to have a deeper pullback, which it did. It took out that recent low, and generally that's your technical pattern that happens. You get that one. If it can't go up off this high low, and we can't trade back up to the highs, then you tend to have a deeper correction. So there's people may have been holding it in here. They bought it. They could have been looking at this stage. It was against them. They were holding on for dear life. It popped up. They were coming back to break even. They're all happy then. So this pullback. And when it starts getting back up, if they haven't closed out by then, so you get that initial people that are just going to close out. Okay, call it a day. It's break even. I've held the heat. Don't like it. I'm going to close out. And that's that sort of first reaction lower. Then the buyers might step in again. Anyone that probably missed the boat and is looking this. So at this stage, it's actually still looking positive. Looking at it as a high low, it's going to go straight through to new highs, 750, and away we go. But instead, it started finding a bit more resistance back at the previous, well, that $7 level. So anyone that was holding in here and has had, they didn't get out on this move down, it's come back up. They got back to break even. Okay, the heat's back off, and they've gone back underwater again. They've taken some more heat. They've seen it up for their sort of a third time, and it's starting to struggle. They're going to bail, and that's where you start to get in the pressure of sellers starting to come in because you've also got that double top. You've got a bit of a wash out of the high. Technically nothing's looking quite good there. And then you get this deeper correction. And it just cleans out a lot more people of this trend up. What we call the weak hands. So what's happened there, it's popped back up. Okay, that's nothing special about that. But then we started getting this retest. We started retesting that 575. So that's great. And it's only now, well, give or take, we'll have to look at the daily chart, that we're just starting to pop our head up after retesting that 575. So after all this price action's gone past, it's that curving action you always like to see. The market heads up, whether it corrects, you get that two-legged correction, and then you start getting this curving action and it starts to pop up. This is what we're always looking for when it starts to, buyers slowly step in, the sellers are sort of equal and opposite, they're getting matched off, and then it starts to come out of contraction, and ideally we're looking for this type of area. That's what I'm always sort of looking for. And that way, this here, you're not, if you're waiting for this type of setup, you want proof that it's coming out of contraction. There's nothing, just trying to explain this a bit better. You've got to be looking for that higher low to play out, because that's proof that you're not the only one thinking the same thing, that this thing's going up. And there's no reason why it can't pop up. You do T-leg down, it starts holding, comes up, you get this double top here, then boom. You don't know what's going to happen, but if you get it sort of, and that's essentially coming out of contraction at that stage, it just double tops, boom, straight back down again. You don't know if that's going to happen. So ideally, that's why you'd always be looking for that higher low, because it starts popping up, pulls back, and then it's met again by some selling as it's coming out of contraction. That's a really good sign that things are looking up and things are looking to new highs. And I think we're only just starting to get that now. So, and that's on the weekly anyway. So what I'd ideally be looking for, if we're going back to the daily, for me, this price action, because it has taken quite a while to just over a year. Is that right? 18? No, sorry, I'm lying. It's been about 6 months of just this consolidation and holding a daily higher low as well, which it tested quite a few times. Uh, and it's only just popped its head up to really confirm that things are looking up. So for me, it's quite simple, I guess. From here, I'll be looking for. I always do that, don't I? I'll be looking for pretty much a higher low from here. I know someone, and the reason I'll be looking for a high low, and it comes more from a pure risk. I mean, I'm willing to miss it because I think I'm willing to miss this trade, and this is purely because see this move down. It's quite a healthy move down, good selling down to oversold, but it was a clear higher low. So that's your sort of first up until this point. It was your first sort of heads up that things are looking good, and that's probably not so bad. I mean, if you got this breakout here, you took this breakout through, was it 624? You bought it say 625 today, or even yesterday. We touched 625. Yeah, touched that 625 or six. Your risk has to be around that 590 zone, because it's really just you want to minimize your risk. You wouldn't put it all the way back down here off the weekly charts. I mean, you can, but ideally, if you're proven right, you've got that higher low that's built and you bought it in here. For me, it was a tad early, and I'm looking to at that weekly chart how much emphasis is going to be on the move up. So I'm sort of focused more on that weekly chart. I want to see a bit of heat come out of that market. I mean, it could just do, like we said, it could just do this. I moved through there, so it took off from about, say it was somewhere around here, 620, and it pushed up to 760, give or take. So that's good healthy $1.40, $1.30 or 40 move when it was hovering around that overbought. So it could do the same thing here, and you get it pushing up to $7. Okay, and if it just goes up from here, I've missed the boat. But I'd be happy just to confirmation that's broken out here. We've got a high low, and if we could just essentially just pull back from here, we get this sort of pop up through resistance, we pull back, then I'm looking to enter. That'd be nice. I think it's worthwhile. We just see what the stochastics are doing, what the overall market's doing, and that could be a good healthy move because it has spent a lot of time consolidating through 620 down to 570. Spent a lot of time there, and it's only just starting to come out now. So keep an eye on that one. Now, what was the other question? I think it was from John from an email about just asking about what sort of allocation you put to the positions. For me, it's for equities, I'll divvy mine up into 10% for 10 positions. I like to have 10 positions because I feel that sort of anything less when it's a good healthy market. I think we've only got once when scouting the markets and getting good quality setups. There's only once that we actually ticked over. Well, we had one that ticked off quite nicely. It was a prime setup, and it would have taken us to 11 positions, but that happened once. The rest of the time, if one kicks on hard, it'll start slowing down, and then you might see that another one sets up. So I'd be more than happy to lock that in, put it away, open up a position, and then trade again. So that's when you're hovering around that 10, 9 or 10 sort of mark. But I've always found that it's to break it down to say 20 positions, you're probably going to have too many for me, and you're not getting your best bang for your buck. And anything less, even now we've got 5 on at the moment, and we've still got 5 open positions. That was more from a conservative point of view. So I'm finding 10. That's just what I found over the past. It's sort of my sweet spot. Anything, you can have a lot more if you want, but that means you're probably going to have some that you're more fundamentally based and just not doing anything. So you're happy to put it in your back pocket. Fundamentals look good, and longer term, okay, it's going to play out quite nicely. Okay, maybe your timing's off, as it happens to be with fundamental analysis. It's hard to get the timing right. Whereas technical, that's the sort of the biggest bonus of technicals is looking for timing. So you're not, essentially, if you thought this, say Auckland Airport, you thought it was a quality stock, you bought it back here, that's not too long. And then it went sideways. You spent 6 months going sideways. You could have made good use of that capital, especially if you bought it. Say you bought it somewhere around $6. You've been oscillating above and below 6. So you've been up, you've been down, you've been up, you've been down. It's also the mental pressure, the mental energy. If you don't mind taking a hit, okay, that's fine. But you haven't got confirmation anything's just happening there. You're only going purely off fundamentals. The fundamentals are looking good. So you're buying at $6, but then you spend the next 6 months just watching it. And that capital for me, I always think it could be better placed somewhere else and trading somewhere else. For instance, what's a good one we just had recently? BKL, trading that over the last 6 months. Was that 6 months? Yep, that's 6 months. So, just that alone, and then you book it, and then you're jumping back in at $6 again um, for AIA, and that only over the last few months. So it just, it shows that you can probably be a bit smarter with your capital. Sometimes you may give it up, and if you just entered now at say 625, okay, you're giving up a bit from $6, but you might have had a couple of trades like BK, you booked, an extra 20 or 30% if you're lucky, say 20%. So it's not so bad an idea to give up a bit to get confirmation, um, and potentially use that capital to work somewhere else in something that's going to give you some returns over that 6 month period. Or, I mean, this could have taken a year. I mean, what if you happen to bought it, say $6 way back in 2016? It perked up. You've been just sitting there holding it all through this stuff for the last year and a half, and the fundamentals haven't changed. You haven't been forced out by your fundamentals. Everything's looking great. So that's just my sort of rant there. Now, what was I saying? I've got sidetracked again. Oh, yeah. So 10 positions. I'm happy with 10 because I find that just works for me. Also, another thing I think that John was saying about partials, he doesn't take partials. I'm always happy to take partials because I just like to lock it in as quick as possible. And it doesn't always happen. Sometimes partials, if you get a market that's just trending up like this, sometimes there's no real clear way because it started way back here. You've got this market that's just been going up time after time. There's no real clear, and you entered somewhere, on a breakout here. You got your risk there. It's just going higher. It's clear skies. So sometimes you just don't need to take a partial, unless of course you get forced out, and you can get forced out. A little pop up here, you get forced out here of a partial. Then you get this macro correction, comes back to longer term average and starts to build again. You still got half a position. Okay, that's fine. If you don't want to take a partial, then this is times when you could get cleared out or your full position, depending on how you trade. I mean, each to their own, really. I find that partials works for me. I'm always happy to take a partial exit. It could be 5%, it could be 10%, it could be 20% on those moves. But I'm always happy to book something. Pay yourself a bit, put it away, and then you don't have to worry too much about the rest of the trade. It just takes the pressure off too mentally, and then it frees up some capital potentially to trade something else. Um, yeah, so that's the way I would look at it. Um, if you don't take partials, then I'm just trying to think of an example. What could get you taking them? And there could be times when I've taken a partial here, for example, and it hasn't looked back. I've got clipped out here. You haven't taken a partial, and it turns out and just keeps going up. Okay, so be it. I just find more often than not for me that doesn't quite happen. And most of the times when I have taken a partial, it hasn't been too much longer when it's turned around and had a decent correction, and I've been cleared out anyway. So I'm not giving up too much. I'm just trying to think of other examples. There's been times when I've taken a partial and it's saved my skin because I've got stopped out for a loss at the rest, and you end up with a slight positive trade, or you've been stopped out at break even. BKA for an example, if that's let's just get that up. Just back to the daily. So if we had ours potentially back here, that was a good leg up, but there's no reason to say it can't pull all the way back down, retest this low. I'll get stopped out at a small loss in the second half, but that initial partial has helped me out. So I think for me, the way I look at things, it actually helps me taking partials for a lot of things. It helps my statistics, um, and it also helps with just, there's the last thing you want to see is the thing kick off like that. You haven't taken it's come all the way back down. At the moment we've $7.50 away from where we took our partial exit, so that's pretty handy. Yeah, it's a good percentage move too on this one. So I think it works for me. It takes the pressure off, and then I could just sit and look for new trades, let the rest of it go. I mean, I don't care if we get stopped out at 133 on this one. It doesn't bother me. We've taken something. Okay, so be it. My plan for this one, I'm expecting a higher low to build somewhere around here. I'd like to see the buyers start to step back in and start to push it back up through 155 and start attacking up towards 170. Now, if it doesn't play out like that, I'm going to be wrong somewhere along the line. I'd rather be wrong higher than lower. Okay, I hope that makes sense anyway. Let me just refresh something. So any questions there, guys, or just chuck in some, is there anything you want to take a quick look at? Or you're happy to hear me yabbering on about things? I'm happy to yabber on. It's what I do best. 720. Let's just see what else is moving at the moment. All right, we've got FBR was one today. I've been looking at this one for a while. Let's just click back to here. What I like about FBR, I just probably got caught. It looks like it's had good news today. Just draw it up. Might not be everyone's cup of tea, this kind of stock, but you know, if it looks good, I'll trade it. That's what we've been looking at, and then you've got, you know, essentially a nice little support zone through here. You can see sort of through that 14.5 to 15 zone. It's tested down here, popped up, lower high, pressed down through, only washed out. When you get these moves down that don't take out the lows, the previous lower low by much at all, and then they sort of bounce all the way back up close to those previous lower high, it's not a bad sign, especially when they come back down and they don't quite get to the previous low. That's, you know, it's all something you've got to put away when you're assessing it, and then you can see the market started to break up. Now, I wouldn't have touched it right up until maybe this day. That's when you first want to look at it, because it can just chop around. It can easily, and it's happened to me before, when off this, you're looking, okay, you buy it. Let me just take a step back, clear that out. So at that stage, if you're looking at it and you go, okay, this is played out, it's looking good, I want to buy it. We've got higher low here, and you're buying it with a breakout. If you bought it on that candle there, what's to say it doesn't fall short, you know, 2 cents or 1 cent here, and it would start heading south again. So that's why it's always important to see, you get confirmation that you've broken out of contraction, and we only really get that here when they get that pop out. Okay, sometimes there has been times, and it's quite a few times, when the market will just keep going up, and that's where you just have to grin and bear it, and just watch it. That's okay. It happens. It happens a lot of the times. But if you start chasing it and you get it, and you see a couple of days up and it gets somewhere around here, and you're chasing it, that could be the exact day when it pops up. You haven't got your pullback. You're getting back up, and it ends up being a major lower high, and you get caught. You know, you've chased it up. Was it FOMO, fear of missing out? You've chased it up. You've bought it up here because you haven't got your higher low, and then it just turns into something else altogether. So that's why I'm always looking for a break up out of contraction, a pull back to build my high low, and then get in. And that's that extra bit of confirmation. And technically, it hasn't happened on FBR just yet. You probably would say that, well, that's the other thing. An early entry would be, you know, if it pushes back up through 19, if it trades 19 again today, where are we? About 18 and a half, 19 now. We're just trading 19, I think. Last trade was at 19. All right. An early entry would be, you know, you can buy it at 19 right now, and you can have your stop just here, because the fact that you can see that it's starting to come out, it's just broken out, but this minor contraction lower. So it's an early confirmation that's going to be a higher low off this sort of 14.5, 15 zone after contraction, you know, breaking up and out of contraction. So your standard procedure is going to be straight up through 21, and then you're going to start attacking different levels here and potentially right up towards 30. And then you've got a good risk reward. So taking that, say at 19 with a stop around 16, say, it's 3 cent risk, and you've got potentially from 19 up to 30s. Where's that up to 11 cents? So it's nearly 3 to 1. So not a bad risk there. Or you just wait for clear confirmation, break up through 21. Your risk's still going to be around a similar sort of a spot, and then you're looking up towards 30. So you're taking, your risk is going to increase slightly, but your risk reward might be around 2 to 1, I guess, if I'm right. For, yeah, say give or take around 2 to 1 on that. That's if that plays out nicely. I mean, that's why trading it here, that's actually quite an early entry. And most of the times when you get this type of price action, you've got major contraction, you found the base that's been built, you're broken up and out of contraction, and it has this minor contraction again, and then it starts breaking up and out of that. A lot of the times, it's a high probability trade that it's going to break up and through 21. It's very rare that it starts bouncing around and starts heading south from there. It can do on the futures, and because they tend to wash people out quite a bit. Uh, but yeah, not so much on the stock. So it's quite a handy little trade. But we'll see if this one how that plays out. It's looking okay at the moment. AXL, we'll have a look at that, mate. Just trying to think if there's anything else I've got my eye on at the moment. No. No, see BKL's still coming down today. Zip. There's another one. Z1P. It's quite clear. Oh, quite clear. It's fairly clear. Look at this price action. Okay, it's curling up. Okay, have a bit of a correction here. Back to the MA. It's curled back up again. This sort of action, it's choppy, clean out here. You got an inside high low, and that led to a move straight up to 130. Good correction back again. So it look like we're putting in the groundwork to build a base sort of around that 80 zone, 80 to 90. I don't like the last 3 days. I was looking at it on a break up through 90 and then potentially a pullback, hold a high low, and then push back up through this high at 93 for potentially entry. But it's not, I want to see it do a lot of work, but it's still, it's got all the makings. Things are there. I did it again. Let me just do that. Take another one. Snapshot. It's got all the makings of, everything's sort of in play. You've got this move up, and that's your previous. I got my daughter behind me. Sorry. We're at the plastic concept. Do you want me to look at it, Axel? So you got this moves down, and then you've got. Whoop, just draw it up a bit clearer. So you've got that there. So this, you've got sort of your two moves down, and then we're starting to hold. We're holding that base, and that's more confirmation. If we're weak from, I would have expected from that little minor lower high to break through, break down, potentially come all the way back down again. Instead, we started to lift again, and we've just washed out this previous high. So that's, we're putting the price action from here. The last few months, somewhere around April. So April, May, the last 2 months we've been building. Just chopping around between here. We lifted quite well. You can see this was quite contained. Moved down, little pop, moved back down to support, and then started to lift. And this most recently, this lifted from the lows straight up to the highs in a few days, and just broken through. So ideally, what you'd be looking for here on what I like to draw straight lines is we've lifted up and through. We've had a decent correction over the last couple of days, but you can see it's just getting soaked up. Potentially today, you're going to get a bit. It's going to get a bit wicky today. We've rejected the lows today, and what I'd ideally like to see is maybe a bit of contraction and then a minor higher low, and you can get an inside level, a bit like that FBR, an inside level below 92.5, which is the high up here. If we can get an inside level like this, I don't know if that's coming through clear, guys. I hope it's coming through clear on the stream. If you look on your phone, I apologize. It could be a bit, this drawing here might be a bit small to see. But you can go back and look at it on the computer and it'll be a bit clearer. But that inside level, if we can get little higher lows holding and we get an inside break, we call them what's it called? ICT, inside continuation trade. Inside continuation when it's had a pop up. Everything in the past is building. It's all going to plan here. You go pop up, nice little correction, base building, pop up, breaking the most recent lower high. Then you got your pullback, and that's your pullback there. So everything prior to that, this sort of contraction, is very positive for a move up. And so if you get a nice inside level, all it's really doing is reducing your risk you have to take on the trade because it's a high probability move. It's a high probability set up for a continuation higher, and that's going to confirm. So what you're really doing is taking it prior to that high, a break through the high. So let everyone else take it there, and these are quite high probability setups. You can minimize your risk quite a bit. It is a bit more aggressive than taking it, a break through 92.5. which would be more here. Oops, just make that a bit bigger. More there. That would be entry there. You're taking an entry a bit earlier, but 9 times out of 10 or 8 times out of 10, they lead to the same sort of a breakout. APX, right? Got you. Got you. Does that make sense, guys? Just what I'm talking about there? But yeah, this is what I'm waiting for. This is what I would be waiting for on Z1P. I think it's the old zip money. It's probably a bit of a small move, so it might not be most people's cup of tea, but you can see if we do get a move back up to $1.30, you're potentially taking a 10-cent risk for a payout of somewhere around 35 to 40 cents. So that's a 4-to-1 trade. If that's the case, and even go further, and if you match it out from say 60 up to $1.30, it's about 70 cents. If you take that from somewhere around 80, say, $1.50, so it's even better than a 4-to-1, potentially 5 or 6-to-1 trade. If that's, if it plays out according to plan. If it doesn't, you just reassess it on the way. So if that's making sense. Now we got John's putting APX. We'll get into that. And yeah, I've had this one on the cards. Admittedly, this is what I'm finding it a bit tougher. You can see, we'll break that down. It gets, and this is probably lately, and this is where I think, for me personally, it's more important that I stick to my guns at this time of what we're seeing. Because actually, we'll just take that aside. A lot of setups. I mean, that's a technical setup. That's a good setup. You've got to break through 11 bucks. Risk is down, somewhere around 950. That's a technical setup. You're taking a continuation trade, up she goes, and you're expecting that to continue on. You might have to take a bit of a heat when on a pullback, but really, when you're looking at the weekly trend's up. The daily trend's up. Nothing's wrong with that at all. Your anchor would probably be somewhere around 950. So all looking good. I find it a bit tougher to trade because we're overbought on the weekly. Getting to overbought, we had a little pop up to 80%, pulled back. We're somewhere around, you're hovering around that overbought mark. That's all fine. If it does something like this, it stays in overbought and starts edging higher. That's all great. And the same on the daily. That entry for me, just through 11 bucks, for example, if that was your trade, you're somewhere around overbought rather than being somewhere around oversold and it triggers. I'd rather be in that sort of a move or sort of a setup. If you're somewhere around, overbought here, and then you've got your setup, say like this, say you've got a setup in here, or even here somewhere. That was a nice setup prior to the highs. Instead, we're into new high territory. I always find those trades a bit tougher. And I know it's clear skies and all, but I just find them a bit tougher personally. So I find that on the ASX, there's more than enough setups to suit everyone's style. So I try to steer clear of these types of ones because they just don't suit my style. I find them a little bit riskier. I mean, of course, they can pay out, but the weekly charts, you can see this move up here. It's had quite a big move up from the previous sort of contraction low, and it hasn't looked back. So as compared to this little move up, where we've got from the lows to the highs here, it's not that much. We've had from those lows right up to the highs somewhere. If that's the case, if it stops here, we're up somewhere around 11 bucks. That's a solid move up for me. So I find for me, this is going to be a low probability trade if I get in here because it hasn't had a macro correction like this, where we've come back down and we started to lift again. By macro correction, I mean you've had a leg up, and then we get something like this, maybe down, and then we start to build again. That for me is a macro correction. And then you've got your entry here. You've cleaned out a lot of the traders of the major trend, and you're looking for the second major trend up. That's what I like to see. I tend to like to buy into those, not somewhere, potentially here, if that's the case. On a breakout here, that could be just prior to a macro correction. You don't know what's going to happen, but I tend to feel more comfortable buying when there's contraction going back into expansion than buying somewhere that could be late into a trend. Not to say anything, I could just keep going up. It could end up at 20 bucks before you know it. But I feel that there's enough around on the ASX for me to go and look at something else. So yeah, that either way, John, it is broken out. Everything's up. Everything's looking positive. If you had your wrist down here, nothing wrong with that at all. If that suits your style. happen? Let's just see. And another thing, what is in the favour of this trade personally? Murray, all right. LYC. I got a feeling, Murray, if you can hear me, you can't get onto the chat. To get on the chat, you've got to have a Google login. If you are listening to me, and if you do listen to me later, yeah, just you got to log in under your Google so you can actually get into the chat function. You can see here I'm under TradeSetup. I'm logged in, and I can get onto the chat. I can type in. But if you're not logged in and it's just your standard Google, you can just watch. You can't hear. Watch, but not participate in the chat. So what was that, Linus? All right, we'll get into that. So is that making sense here, guys? John? Anyone? Anyone? But Linus, now that two things that stand out to me. I think there's more work to do on that, and we could be part. This could be part of a major move down. I don't know what's going to happen yet. I'm not willing to, just sheer glancing at that first sort of price action. I'm not willing to throw my money at it. But then again, there's two things. There's conflicting views for me. I just want to see it do a bit of work. I mean, I could be left on the sidelines for this trade, which I don't care. All right, let's just draw it up. I'll focus on the daily, but the weekly, just look at the weekly here. The good thing is, you can see it's up, pull back, it's consolidated through here, high, low here, it's pressed up to $3, had a good, got pounded back down to close to $2, which reacted up off there. So that trend, excuse me, if we can draw that, yeah, you could probably find if you draw a trend line across the lows, you're going to find that's going to touch right on that trend line there. That this most recent move down on the daily. So it's just reacting up off there. It's in a prime position too. Look at the stochastics. That moved down from just below around about that $3 over the last 3 weeks. Bang, from overbought to oversold. And it's holding in comparison to where it's been the previous high lows, high low. It's taken quite a bit of energy to take it from $3 down, but it's holding up at a higher level. So buyers are stepping in, are happy to step in at higher levels, meaning they've got confidence this market's going to keep pushing higher or continue higher. So bear all that in mind. Whereas we're overbought, on the daily we're overbought. So to me, it's that conflicting view. The weekly saying, okay, you can buy it. The daily for me is saying, oh, hang on a minute, maybe a bit of heat's going to come out of here. So you just take the same sort of analysis. We've had that move down. When it was last time, it was overbought. It was way up at $3. You've gone to oversold. We got down to about 210. Just one tick there, guys. Live. Okay. All right. So last time we've gone from overbought up here to oversold. We got all the way back down to 210. Now we've had this little press up here. We've gone straight back to overbought. So it's taken a lot of energy to get back to the sort of 90% mark, but we are only around 250. So we're still 50 cents shy. We've only sort of retraced 50% of this move down. So just that alone would lead me to believe you've had a move up. That's about where we are now. It leads me to believe that we're going to have that secondary move down and clean out a lot of the traders. Potentially could be looking towards 170, 180. That's just what that is saying to me at the moment. That secondary move down and start to build from there. Do whatever we want to do. But the weekly's saying something slightly different. And don't forget, we've probably got a trend line that's coming up somewhere around there. So I'm more inclined to believe let's just draw this up. Go back to blue. I like using my colors. I should just stick what we've got. That should move up. That should move down. We're about here. Change back to blue. I'm more inclined to believe that the weekly is going to put some pressure on buying and we're going to get some high lows starting to build. And if that's the case, then you've got a clear entry setup off minimal risk. So if we get a bit of contraction in price, it might chop around here. The stochastics can come off a bit, meaning that the sellers are trying to give it a good nudge, but buyers were stepping in. They're happy to step in at 210. They're happy to start stepping in around 230. And then the sellers eventually have to just give up the ghost and up she goes. But we'll see. Does that make sense here, guys? Oh, no worries, John. So yeah, that was yours. Wasn't it Murray? Okay. Yeah, I hope that makes sense. But yeah, that's pretty much the way I'll be analysing this one here. And you've always, I know a lot of people, that's why I like to flick around between charts, because don't forget, not everyone's a day trader. Not everyone's an intraday trader or a daily trader or a weekly trader. There's a big mix. So when you get these sorts of moves on the weekly chart where people are looking at that, looking at it come back down, they might be happy to start buying it up here. So that's why you've got this pressure. People who could be building a massive position, a lot bigger than what I've got, a lot bigger than what you guys have got, they might be big in it and buying it in the fund. So they've been adding, and they're looking for potentially a good move up to, I don't know, $10, for example, picking something out of the, out of the proverbial. So they're looking for a good solid move. Okay. So that's why you've got to keep checking back. Just check back to the weekly to see where we're at. Now, but that's why I always like to flick up between both. And that's where, okay, what that does, what it could mean is that, okay, the daily stays overbought. This market just keeps grinding higher, goes up through 3. I'll miss out on that trade. It doesn't matter. There will be something else that will conform to my analysis, will play out okay, and I'll just trade that one. Doesn't bother me at all. Does that make sense? So what it does, it means that if this daily does play out, and I say I get in here, and then we do play out to maybe this, you have a deeper correction, I've either got to hold it on for a long time, I've got to take a bit of heat, and it's going to mess with my head because I don't know if this is just going to continue back down. We're going to break this longer term uptrend. You know, say you do break through 220, then what are you going to do? This could be a major correction lower, and just glancing at that monthly too. Monthly, we're an overbought. So this one could go all the way back down to a buck. You just don't know what's going to happen. I mean, don't presume that what you read, I'm not having a crack at fundamentals, but what you read in your fundamentals are going to be right, or is the whole information is going to be stuff that maybe hasn't been released. It's not so good. It's going to send this market straight back down to $1 where it was previously. But if you're just trading by analyzing off your different charts, get your setup, know where your risk is, exactly where your risk is, where you want to get out when you're proven wrong, and then just trade it that way. That way, your stats are going to over time going to be quite nice, and it's going to play out quite nice. All right, might have to call it a day there, guys. I hope you enjoyed that. Now, I just keep forgetting Monday is a public holiday in Melbourne, so the markets will be open, but I won't be streaming on Monday. So anyone that loves listening to me, just give me a phone call. No, but I won't be in on Monday. Be back in next Thursday, so for a week from today, back streaming at 12:30. So I hope you enjoy. If anyone from Melbourne has a long weekend, I hope you enjoy it and have a good weekend. Otherwise, I'll speak to you all again on Thursday. See how the market goes between now and then. See if we do get that push up in the Dow and drags our ASX higher. See where the ASX. So we're up 40 at the moment. So since we've been talking, it's probably backed off about 4 or 5 points. Nothing too bad, but yeah, see how it goes. All right, guys. Thanks very much. We'll speak to you again soon. Cheers, guys. Bye.